Good morning, all. Let's start with the morning call. Nifty consolidated last week was down 1%. In weak global markets, where the world market was down 2% last week. For Indian markets, the earning sentiment has improved with the number of upgrades outspacing the number of downgrades. For calendar year 23, the aggregate earnings has been upgraded by 1% since the result season has started. Today morning, the China Central Bank has cut its one-year loan prime rate. This is the second time in the 3 months it has done so, underscoring the urgency to boost the growth. The People Bank of China has cut one-year loan prime rate by 10 bips from 3.55 to 3.45, but has left the 5-year loan prime rate unchanged at 4.2%. The street was expecting the cut on the both rates, but we have seen cut on just for 1 year loan prime rate. Most household and corporate loans in China are based on PBOC 1 year loan prime rate, while the mortgages are pegged at 5 year rate. Few stocks that will be in focus. First is the Geo Financial Service, where everyone is eyeing today, as it will be listed today on the exchange. The stock will be in T2T segment. There will be also a pre-open session for a Geo Financial Services, the way it is for the stock getting listed post IPO. Pursuing the public documents, it announcements and media report, we recon that it will enter into consumer and merchant lending, asset management, a joint venture with the BlackRock already announced. Third is payment, fourth is digital broking, and fifth is insurance broking. Given its access to capital and experienced management team, if we benchmark geofinancial services to the best listed player in each segment, that is Bajaj Finance in lending, SDFC Asset Management in AMC, Angel One in digital broking, Paytm in payments, and PB Fintech in insurance broking, then it is not too far-fetched to expect the geofinancial services to reach today's scale of these players by FY30. Street acknowledge that it will be the fastest scale up seen, but we will need to watch out the pace and the mode of the execution. While we believe it's too early to make any concrete judgment on implication for the NBFC sector. Second, Gujarat gas will be in focus as the PNG industrial prices has been increased by rupees 2.4 standard cubic meter to protect the margin. As highlighted in the second, the result, the PNG industrial prices is in line with what the street was expecting. This hike is mainly due to the increase in the crude linked LNG prices and the rising spot LNG prices, while this comes after the 5 consecutive price cut in 2023. Coming to actionable ideas, two actionable ideas. First is Titan. Given the Titan has acquired the balance shareholding in its unlisted subsidiary, Cartlane, the current transaction pegs the valuation at nearly around 170 billion rupees, that is nearly $2 billion, which is lower than our target valuation of 245 billion rupees, which is nearly equal to $3 billion for the business. Though this transaction will be EPS dilutive in the short term, but we believe that this is accretive in the medium term value for the Titan. While the cat lane is an attractive, high growth, profitable business, FY19 to FY23 revenue CAGR of 51% with FY23 EBIT margin of 8.6%, with opportunity to ensure healthy revenue of for FY23 to 26 CAGR of nearly 25 to 27 odd percent. While Titan remains a solid discretionary consumption play in our view, any volatility in the stock prices should be used as an opportunity to add the positions. Second, Bank of Baroda is what we like, as the bank is making some progress on the strategy, and we should see some gradual ROE improvement. It is also well capitalized relative to other government bank and has NPL coverage that is among the highest in the government bank. While the management also sounded confident of expanding the bank credit portfolio ahead of the banking system credit growth with relatively stable margin. We believe the corporate NPL cycle is over with the merger integration over. We remain a buyer with a target price of 210 to 216. Lastly, a light data calendar week this week will leave the street focus on the Fed Jackson Hole Summit Thursday to Saturday, and where the Federal Reserve Chair Powell is poised to deliver the talk on the economic outlook, and it will let the world get a chance to see his latest view on whether the more policy tightening is required to rein the inflation in surprising strong growth figure or to hold the rate steady. We'll stop here and hand over for further update. Thank you.
Yeah, thanks, Kaushik, for the update. Very good morning, friends. Rahul Sharma this side. Uh, it was like Nifty has formed four consecutive candles on the weekly charts of Nifty, something which has happened for the first time since the COVID crisis hit us. Now, the question to ask is whether the all eminent breakdown will happen or not going into the next few days of August. So, there is a head and shoulders pattern on the daily charts of Nifty, the breakdown of which is placed around 19 to 50 area. And if that happens, we should see the Nifty heading towards the 18,881 mark on the downside, which was the previous resistance area for the Nifty. Now let us see how the global markets are placed. So US closed okayish on Friday. Dow Jones closing near the support level and as it found intraday support around the 34,450 mark. And in fact, in the last week, India has outperformed the US markets, forming a bullish engulfing candle on the weekly charts of the ratio chart, which is Nifty by Dow Jones. Secondly, on the data side, Nifty has failed to attract fresh shorts in the last week. So the combined open interest in Nifty futures has remained more or less the same in the range of it hovered in the range of 2.5 to 2.7 lakh contracts ever since the July expiry was seen and August series started. Bank Nifty was one where short built up was seen as the open interest has moved from 1.33 lakh shares at the beginning of the series to 1.62 lakh contracts, a jump of around 22%, which means that primary shorting is witnessed in banks and Nifty has not really seen the traction of this shorts. Now, who have been shorting this? So clearly, FIs have maintained net short positions for most part of the August series. However, the quantum of the shorts is nowhere close to what they were holding when Nifty was in bear grip way back in February and March. So around 40,000 contracts is what they hold on the short side. Uh, the good thing is last week when Nifty hit a new low meaning Nifty tested 19 to almost 19 to 50 was tested on Friday. There was fresh short additions seen by FIs, and also on a weekly basis, fresh shorts are not seen. In fact, short covering is seen on a week-on-week basis. So the OI, which was previous Friday was around 40,000, is around 31,000 odd contracts as of Friday's closing. Individually also, the week on week commitments were not seen in open interest in Nifty, Bank Nifty, or Fin Nifty. The only cautionary setup was there in India VIX, which has given the highest weekly close in 12 weeks and has settled above the 12 level. So we'll keep an eye on India VIX going into this week. If the breakdown does happen and if VIX does, or if VIX shoots up in a significant way, a caution will be advised and will convey the same during the market hours. On the stock specific front, it was Reliance, which was the poster boy, adding 33.7% open interest on the long side. Kotak Bank was the one which bore the brunt of selling pressure as higher shorts were added in Kotak Bank. The open interest moving up by 15% in the previous week. Whereas metals took the maximum price hit due to the Chinese updates followed by Bajaj twins. Now, the weekly view for the Nifty is the region of 19,250 to 19,295 has multiple supports as technical as well as derivative supports. And unless and until this area is not broken, we should be hopeful of a bounce back from here. Also, that 50-day expiration moving average is placed at 19,229, which is making it attractive for longs around these levels. On the hourly charts, a very interesting triple bottom divergence is seen on Nifty and Nifty futures, which means in spite of three attempts to create a new low on Nifty, the momentum has not really picked up, and in fact, there is a bullish divergence which would mean that at least for 1 or 2 days we should see a breakout happening from the downward trajectory. Now, what are the levels to keep an eye on? So, if we do not break 19,250 in today, and in case we do cross 19,390, 19,490 in this week, we should see eventually the correction ending and fresh longs can be expected to be added. Shorting action is only advised if we break 19,250 decisively. So, this remains a crucial level for any short action. On the stock specific front, good action was seen in Maruti. On Friday, 12-day high volumes were seen. One can expect it to test 9620, 9700 on the upside. Whereas MFSL has given a breakout. We already have an open position at 850, 852 rupees in MFSL. It has closed at 871. Now, this breakout is quite big and it can actually take the stock higher to 935,000 rupees in the coming few weeks. And this is like the highest weekly close that has been seen in the last 1 year. Adani Ports is another interesting one. We had a long position in this one as well. We had mentioned at around 775 2 weeks back that the stock is coming out of the woods. And now it seems like it should head towards the next target of 975. 875. On the bargain stocks, Britannia looks good. One can expect bottoming out in Britannia. It has taken support near its 200-day EMA of 4478 and a bounce back. Like as of now, it is not like a confirmed big reversal, but at least a bounce back can be expected, which can take us to 4700, 4750 on the upside. The overall macro outlook continues to remain positive with key support levels placed at 19,295, 19,160 and 19,000 for medium term targets of 20,200 and year-end targets of around 21,000. IT, PSE and metals remained our favorite sectoral bets going into the rest of 23, whereas chemical sector is something where one can see a short to medium term kind of attraction, and we will initiate a basket for the same in this week. Overall, banks continue to be like technically on the weaker side, relatively on the weaker side, as any short action that has happened in the last few weeks has been primarily into banks. So one can continue to stay long on the IT and PSC space where we feel the alpha generation can continue. Two interesting charts on the public sector enterprises. One is ONGC. We've discussed this in the past as well. So ONGC at a macro level is looking very strong, and above 175 the bias remains positive. My sense is in the next 4 to 5 months we could very well see the stock heading towards the 225 mark on the upside. Another stock that looks very good is Gas Authority of India. This stock has actually seen a small correction in the last few days, and at 112 odd, the risk reward is favorable for long positions in the same. Structurally speaking, in the next 6 months, this stock could also head towards the 145, 150 mark, and one can look to add investments in this. We've seen mega moves happening in NTPC, in oil marketing companies in the first leg of the rally. I think the next move could very well happen in the oil and gas space, especially ONGC and GAIL. So that's it from my side. I hand over the call for further updates. Thank you.
Thank you, Rahul. Good morning, all. Jai this side for the currency and commodity update. The upbeat US activity numbers, retail sales, and the wage growth, along with the hawkish Fed minutes, allowed the US dollar to remain firmer for the fifth consecutive week. It ended the week with a gain of around 0.5%, while on a daily basis, it formed a doji candle on Friday. Overall structure remains positive for the dollar index with a support placed around 102.70, while on the upside we can see a move up to around 105 levels in coming couple of days. Now the major event would be the Jackson Hole Symposium will be important to watch as the major central bankers will speak between 24th August to 26th August to suggest the optimum path for future monetary policies, and that will have a impact on the currency market. So the volatility is expected to remain high between these days. During this weekend, China's top tier financial authorities gathered to discuss the market's concern about the spillover effect from the nation's realty sector debt crisis, as well as doubt about the local government bonds. Now, after the meeting, the officials showed readiness for the more stimulus and put a floor under the riskier asset. Because of that, we can see a positive momentum in the base metals as well as in the crude oil prices. But the Chinese currency is depreciating against the US dollar, and that will have a positive impact on the USD INR as well. Now, the higher 10-year bond yields, dollar index, as well as depreciating Chinese yuan, all highlight towards the USD strength, and thus the USD INR may also move higher from the current levels. From last three consecutive days, the USD INR future manages to close above the breakout level, and it closed above 83.10 level. Overall, the truncated week ended with a gain of around 1/3%, and on week basis also we witnessed a breakout from the range. So overall trend is definitely positive. On the downside, 82.90 is a very crucial support levels. Till the time it holds 82.90, there is a possibility that we can see 83.50 levels maybe in this week or in next week. So it's a buy on dips market. So traders are advised to trade with a positive buy. One can buy 83.25 call option of the monthly expiry, or if someone wants to buy the futures, then 83 is a good level to initiate a long on the futures with a stop loss below 82.90. On the commodity side, gold ended the week with a loss of around 1%, but on Friday it formed a inside bar pattern on the daily chart. Overall structure is still on the negative side, and we are not witnessing a major strength at the current levels. So overall, it is expected to remain in a range of 58,800 to 58,000 levels, and some bit of selling pressure can be seen at the higher levels. While the silver managed to end the week in the green with a marginal gains, and on Friday as well, it ended with a gain of around 1/3%. For silver, a very crucial support is placed in the zone of 69,000 to 69,300, and any dip towards the same shall be used as a buying opportunity. We are expecting a bounce up to around 72,000 to 72,500 on the silver, and thus we are maintaining our positive strength on silver futures. Crude oil gained by 1.3% on Friday, and considering the overall structure as well as the news of a possibility of a further stimulus from China, we can see a further bounce back in the crude oil prices, and it may bounce up to around 6,950 levels. On the downside, support is placed around 6,620. On the base metal as well, we are expecting a positive momentum, and the preferred pick would be the copper. On copper, technically also we are witnessing a bounce back, and in fact, a positive divergence was seen on the intraday scale. So we are expecting the copper prices to move up to around 735 to 740 levels. So one can buy the copper with a stop loss below 717. So that's it from the currency and commodity side. Now we are open for Q&A.